What's up, traders? Anthony Crudele here, and welcome to the Futures Radio Show podcast. Today, we're diving into the launch of the Micro Nikkei Futures with Paul Woolman, Managing Director and Global Head of Equity Index Products at CME Group. We'll explore how the Nikkei 225 serves as a key barometer for the U.S. index futures during the Asia session, its correlation to the yen, and why these micro contracts are creating exciting opportunities for both retail and institutional traders. Let's get started. Today's podcast is brought to you by CME Group. Whatever the obstacles, CME Group provides the tools that global market participants need to manage risk and capture opportunities. With 24-hour access to futures, options, cash, and OTC products across all major asset classes, you can drive your trading strategy forward with confidence and precision. CME Group, where risk meets opportunity. Paul, welcome back to the show.
Hi, Anthony. Great to be here. Good to see you again.
Great to see you again. Micro Nikkei Futures. I think that this is a product that is going to really, take off for some of the retail traders, because I see a lot of traders talking about the Asia session now. It's funny, I don't remember a lot of people talking about this. Maybe many years ago, it was almost a non-conversation, right? But the Asia session continues to pick up. And I think CME opening up Micro Nikkei Futures is a big deal.
Yes, I mean, we've seen a lot more interest in Nikkei as a whole, and we thought the time was right to offer a Micro Nikkei as a complement to the Nikkei Futures that we already have, which are aimed more at institutional clients. For Micro Nikkei, I think will be appealing to both the active retail client and also to institutional clients who want to trade in a slightly more smaller size for smaller accounts that they might need to manage. What we have seen is, to your point, a lot of interest in Japan, whereby the index level has risen to record levels this year. If you go back to the late 80s, it rose to a record high, and then it saw a deep bear market, and it never recovered to those high levels. It only just recovered here now, like many years later, almost 30 years later. So really exciting times for the Nikkei and the Japanese equity market in as a whole. And as a result, I think there's a lot more investors who've been wanting to get access to Asia and into Japan specifically, and a more nimble sized contract such as a micro on the Nikkei, I think is attractive. And we've seen success straight out of the gate.
Yeah, I mean, it goes back to that first week of August. I remember I was my first week on vacation. Of course, it's always the case, Paul. I get there, I wake up in the morning and I see what's going on. And you had the unwind of that carry trade, and you had the Nikkei going crazy and the yen as well. And to this day, I still see a lot of people continuing to talk about trading even that Asia session. I think maybe one of the first things we should probably talk about, and we know it's the Japanese market, but what does the Nikkei market represent? I know we have NASDAQ, S&P, Dow, Russell. Talk about the Nikkei a little bit.
Yeah, so the Nikkei 225 is a collection of, 225 stocks of the largest market capitalization stocks that are listed in Japan. It's a very, very well-known index. It's a very familiar benchmark for a lot of investors around the globe. And it's something which is interesting. It has a different correlation to a lot of the rest of the equity market, especially to US equity markets. And it's something where once it grabs the attention of investors, I think they, really look to pile into this particular market. And we've seen that over the past 1 to 2 years, I'd say. I think the event risk that you spoke about earlier is something which also brought even more attention to Japan, as there are some risks involved there, but there's also trading opportunities around that.
Yeah, with it launching just about a month ago, bid-ask spreads are tight. Hearing more and more about how hedge funds are trading it, and I think for this conversation, most of the traders listening to this are coming from, the S&P and NASDAQ. And really, we've got a global audience now, which is pretty cool. And as I said, I see so many people trading these overnight hours. Talk about how much the Nikkei really leads that session, that Asia session, and why maybe some U.S. equity traders should be taking a look at this product.
Yeah, in terms of as a risk barometer for the region, Japan opens up earlier than most of the other Asian exchanges, just in terms of the time clock. So you can get a good handle on risk sentiment from how Japan's behaving. And then for international investors, I think it's exciting because I think it is a diversified play. So whilst it still has some correlation in terms of sentiment, the index can perform quite differently over time. And it also has very high correlation with the currency. So US dollars against yen, really there's an inverse correlation with how typically the Japanese equity market performs. If the Japanese yen is depreciating, typically the equity market is rallying in Japan. And so this correlation is often focused on and looked at by traders. And there's a nice interplay between currency, equity indices, US dollars, Japan. And so I think it is a nice way to look across from US indices, also at these Japanese indices, such as the Nikkei.
It's such a great point, Paul. And that's why I wanted you to get into that, because if you're someone who's trading S&P, NASDAQ, or Russell at night, you don't have all of these stocks open. You don't have regular trading hours driving the action, right? So overnight, a lot of that action is going to be driven about what's happening in Asia. And the fact that you have, go ahead.
Yes, I think that's right. And so, as I say, Nikkei is a leading benchmark for that region. And I think it's a good barometer for and a good read across, and also offers relative value trading opportunities between US indices overnight and Japanese indices during the Japanese trading session or Asia session. But what's interesting, I think, about our product on Nikkei is actually it trades pretty much around the clock. And actually, we see a majority of our liquidity in that product actually trading outside Japanese hours. So in the rest of the Asia session into Europe, and actually through the US trading day. So people, even who are active during US trading hours, are actively trading Nikkei and managing that risk and taking advantage of the opportunities. So it's there as a global trading product. It trades all around the clock. And I think that ability to trade it at the same time, US indices and futures are open during the regular US session is also an interesting facet of this.
Yeah, my thoughts to the micro NASDAQ, S&P, Russell, Dow traders, if you're looking at this at night, now you have a product that's comparable in size, that is going to be more of a lead driver and probably going to have more activity than maybe the U.S. markets at these time zones. I think maybe quickly just touch base a little bit on the value of these contracts. Maybe talk about tick size, maybe versus the Nikkei versus the micros now.
Yeah, so it's a tenth the size of our standard Nikkei contracts, which are more institutional, aimed at institutional clients. So here the multipliers are 50 yen for the Nikkei version and 50 cents for the US dollar version. So we have two versions, both one denominated in Japanese yen and one denominated in US dollars. So for traders or for investors who are interested, they can choose, do they want to invest in the product and be exposed in yen, or do they want to trade in the product and be exposed in dollars? And for a lot of clients who are international based, maybe the dollar one's actually quite interesting. But in terms of the size, they're probably in that sort of $20,000 range notional. And don't forget, you only have to put up the margin which is associated with these products, and that's typically around 5%. So very accessible for retail investors.
Yeah, cost efficiencies for futures are pretty good. And I want you to talk a little bit more about that difference between trading the Nikkei and the yen versus the US dollar, and why CME's product is so attractive for that comparison.
Yeah, it's a great question. So we're the only exchange to offer a future denominated, which has exposure to Nikkei, but denominated in dollars. And why it's interesting is it's technically what's called a quanto, but what that really means is you're getting the price appreciation of Nikkei in index points, so however the index moves, but you haven't got the currency risk into Japanese yen. You've just got it exposed to dollars. So if you're a dollar investor, it means it really limits your currency risk. And that's important because, as I spoke about earlier, actually, when you look at the high correlation or inverse correlation between how the currency moves and how the actual underlying index moves, some of the time when you're really long this index, if you're exposed to Japanese yen, you're giving back some of those gains in terms of depreciation of the yen. So if you can invest in via dollars and not have that exposure to the yen currency move, that can be quite an attractive play. You're capturing all of the upside move if the index is continuing to rally, whilst you're not really giving away anything in terms of depreciation through the currency. So for a lot of investors, international to Japan investors, that can be very attractive.
Yeah, very attractive. Talk about how the micros are not just being adopted by the retail traders. I think a lot of times people will think, oh, micro, it's just retail money in there, but that's not the case. I mean, as we know, obviously, if you're trading S&P and NASDAQ, you know that there's so many people participating in those products. But when you get to the Nikkei specifically, we're seeing widespread use of this product.
No, totally. So if you think about it, as spot prices have risen, i.e. index prices have risen over time, the traditional contracts which have been out there have become larger and larger in terms of the notional. And so when we have these micro-sized contracts, while they're a tenth the size of their parent contracts, whether that be our US ones or in this case the Nikkei ones, what actually that means in notional terms is it's still a reasonable notional for some institutional investors. And for them, right sizing their investments and the way they want to get exposure can be important. Also, a lot of the institutional accounts have segregated funds, different pots of money, which they don't want to mix up, and being able to right size their investments within the different funds that they are managing is important. So I think it's a mixture of spot prices going up means that actually these kind of notionals are actually applicable to hedge funds, institutional clients too, and the nimbler size allows them to manage the different segregated or pots of money that they may have if they need to, and the traditional contracts are maybe too big in notional terms.
Yeah, volume is growing a lot in this product in a very short period of time. I mean, I was looking at the chart just left to the right. Straight up, you have 21 different countries already trading in this product. As I started off today, I think that this is going to be a big hit, not only with the retail traders that are staying up late or the ones that in those regions. I just think this is going to be a big product.
Yes, really it's exciting to see that real quick adoption of the product as soon as it launched. So it launched about a month ago now. And within that time, if we look at how much traded per day, just last week, we were trading around 10,000 contracts a day between the two versions. For a new futures product, that's very rare. Typically, when you launch a new future, it takes quite some time for it to get up and running and for it to mature. It's very rare it trades 10,000 contracts straight out the gate in its first month. So, and I mean, 10,000 contracts a day, that is, not in total. So, this is, I think, proof of the fact that there is a lot of interest in Nikkei itself. And also in this smaller size contract, it appeals to a wide range of clients. And as you said, it's been trading over 20 countries already, and that's just in its first month of trading. And as more and more clients become aware and the liquidity grows, I think that liquidity is going to snowball and become an even more liquid contract. And we've obviously seen great success in our micro futures generally, especially the ones that are listed on our US benchmarks that you mentioned earlier. They're extremely popular, but this is our real first international offering at CME in terms of an international equity index. I think it's a great complement to the ones that we already have.
Yeah, no, you always go by the response. I talk about this all the time. You could throw all these different products out there. You could do all these different things, and the market participants will respond. And for this one, they're responding very positively. And that's why it's so great to have you here today, Paul, to talk about this. Any last thoughts or comments or anything that you want to say to the traders out there before I let you go today?
No, I think it's worth maybe just touching on that risk event we saw earlier in the year where what happened really was that Bank of Japan raised interest rates, not by very much, but basically from first time interest rates in Japan have been positive for a long time. And that kind of sent a shockwave through the equity ecosystem. And really, it was because a lot of people were doing what's called a carry trade, where essentially they were funding positions in yen by selling yen and investing in a higher interest rate or higher returning asset. And it was a very crowded trade. So we saw a big move in terms of the Japanese market, moving 10% in one day. And I think that shocked a lot of the marketplace. But what it did also is bring a lot of attention to Japan and shows that it can move a lot. And what's been interesting, I think, after that event is actually people have got back into that trade very quickly. If we look at how the index has performed since that shock, actually it's recovered pretty much all of its losses. And if we look at the yen dollar as a currency, that too has recovered or depreciated back to close to where it was at the time. So these trends are there. These are sort of more secular trends. And I think, it's an interesting time to be invested in Japan overall. And I expect that there will be, more volatility and trading opportunities as time goes on.
I completely agree, Paul. My homework for all of you traders out there is go on your platform, search Micro Nikkei, pull it up on your charting platform, take a look. This product continues to grow, and I just think it's just going to be a product that we see more and more futures traders talk about and trade. Like we said, the response is already there, and of course, you can search more of this on cmegroup.com. Paul, it's always great to chat with you. Thank you so much for giving us insight to what's happening at CME Group, and thank you so much for putting together this Micro Nikkei Futures.
Thank you. Pleasure to speak to you again, Anthony. Thanks everyone.